Well, with the news of Silicon Valley Bank being shut down recently, it begs the question, should we be worried about this as small business owners, as entrepreneurs? Should we worry about what's going on? As you know, Silicon Valley Bank was shut down after a 40-year history of being in business, and it was the second worst bank collapse in modern history, the first being in 2008 with Washington Mutual. Of course, there were things that happened that triggered the depositors to rush to the bank and pull out all their money. And we're going to talk about that. Most of Silicon Valley's bank customers were tech companies and startup venture capitalists. Some of the largest were Roku, Roblox, Vox, and Airbnb. Well, here's how the meltdown started. Basically, in 2021, Silicon Valley Bank invested most of its deposits in U.S. bonds, and they had a lot of deposits. They were cash rich, and they wanted to do something with them so they could get a return on their investment and make money. Now, normally, bonds are a safe bet, except if the interest rate goes up. So if the interest rate goes up, then you're looking at a bad scenario there. With interest rates going up, you're still okay if you can keep your money in those bonds and not have to bring them out. You just simply wait until the interest rates adjust and they come back down. But the tech companies over the last several months have been in a downturn, and basically they needed to pull some money out. So they started pulling money out. And Silicon Valley Bank didn't have the money to pull out, so they needed to go ahead and sell the bonds. And when they did so, they had to sell them at a loss. They tried to hide the fact that they needed to sell some bonds to cover the withdrawals from the investors, but they found out, and basically they freaked out. Then it came out that over the last 2 years, insiders to Silicon Valley Bank had sold off more than $84 million worth of stock in the company. So when Greg Becker, the CEO of Silicon Valley Bank, sold off $3.6 million of his own stock in the company, it really started to panic. Investors started contacting depositors and letting them know that there's a problem. So there's a rush on. And on one day, March the 9th, depositors tried to withdraw $42 billion out of the bank. The bank was done the next day. The Fed came in and shut the bank down. The stock price of the bank went from a 52-week high of $597 to $106 when it was shut down. And looking back over history, first quarter of 2020, Silicon Valley Bank was worth $27 billion. And then at the end of 2022, the bank was worth $128 billion. As of March the 10th, 2022, it's not worth anything. Signature Bank was also closed over the last weekend. Now, before we continue, you've heard the news with inflation, with discretionary spending going down. There may be a recession this year, so there are things to be concerned about, no doubt. And if you're struggling with your business or you're concerned about it, I just wanted to let you know I put together a free masterclass, and it's entitled 3 Powerful Ways to Recession-Proof Your Business and Thrive in Any Economy. Just go to americanbusinessheroes.com/masterclass and sign up. It's free. We're going to talk about a ton of information, free information that you can take and you can use in your business to make things better. Again, it's americanbusinessheroes.com/masterclass. Now let's get back to our topic. So what's this mean for small business and entrepreneurs? Well, let's break that down a bit. The FDIC insures everybody's deposit in any bank up to $250,000. Anything above that, it does not insure. Now, most of the depositors, in fact, over 90% of the depositors of Silicon Valley Bank were over $250,000. But the federal government stepped in and said, hey, we're going to take care of you. We're going to insure this. We're going to cover your losses. So they covered the losses of all the depositors, but not the investors in the bank and not the CEO of the bank. So how does this compare to other banks? Well, more than likely, your bank has over 90% of the people with deposits under $250,000 and not over. Banks, you need to know when you deposit your money, they're only required to hold on to 10% of it. They take the rest and they invest it to make money themselves. Well, you may not agree with this, but the federal government stepping in and making all those depositors of Silicon Valley Bank that were over $250,000 whole stopped an onslaught, a run on banks nationwide. It really calmed the situation down. So there's really no logical good reason that there would be a run on all the banks nationwide all at once. I think the situation has calmed down. Will there be other banks that get affected? Probably so, but it's not going to be nationwide. It's not going to be hundreds and thousands of banks. But any bank that has all their depositors come in at once and say, hey, I want to take my money out, well, it's going to cause problems because, again, they probably only have 10% of your money there on location. The rest are investments. They would have to sell the investments either at a loss or a profit to get your money back and give it to you. So any one bank, this could happen to. And that's what happened after the stock market crash in 1929. There were major bank runs and all kinds of banks closed. Also in 2008, there were several. And then also in the popular movie, It's a Wonderful Life, of course, that's what happened to the bank there. So there's nothing to worry about. The situation seems to be calmed down. There's no reason to go to your bank and pull your money out. There's no reason to worry at this point in time if you're a small business owner or entrepreneur. Keep plugging away.